Hi, welcome to the Market Alert for Christmas Eve, 24th of December 2015. And yesterday the market short, but not for too long, and the reason behind that was quite simple. We had the crude oil. It held its gains after the biggest inventory draw in 6 months. And what they mean by this is that there was a if we just go back to here, there we go, crude oil, 5.9 million barrels were drawn off the surplus during last week, and then they did a recount and discovered it was only half this amount, but nevertheless it actually sent crude oil prices surging, and this is the bar here where the market went down through the scalp, just touched the psychological level down there at 17,500 before actually reversing and then coming back. So as I've said before in the alert, the market obviously wants to move to the upside. It's the Santa rally, as they call it, and the market then reversing. They just needed a catalyst yesterday to get that market to move back to the upside. But just around 20 points max on this trade yesterday. But the volatility really kicked in at this point, and then we see the market moving higher, and again stuck in that sideways range for most of the session. And then in the latter part of the session, the PPT, the plunge protection team, coming in and doing their bit and moving the market higher so that the boys could actually get their bonuses. And I think there was somewhere in here that spoke about this. I may have already gone past it, but basically the S&P ended up unchanged. There you go, S&P mission accomplished. S&P soars back to unchanged for the year, unlike the Dow, which is lower than the May high, but the S&P achieving its objective, and therefore giving the bankers the opportunity to trouser a few quid in bonuses as well. But really quiet afternoon, and today we've only got half session, so forget it. There's no point in sitting there. But the markets are back to normal for the US on Monday. You may want to have a look. As I said in yesterday's market alert, last year the markets were really good between the Christmas and New Year celebrations. So I don't know how it's going to fare this year. Some years it's just as absolutely nothing. This year it could be a different ball game. So we have far more of a geopolitical nature in the background. We've got the crude oil market that's now crude oil is actually cheaper than coffee and milk in the US, and no doubt here as well. If you were to scale up a barrel worth of milk, I'm sure it would cost more than a barrel of oil at the moment. So the oil market really dictating the fundamentals, but then no surprise really that there's a whole drop off in the global economy as well. I noticed that the US have also put a tariff of 250% tax now on imported metals from China as well. So there's a few trade wars coming along as well behind the scenes. In the daily chart, again, we see 3 straight days up. The market now struggling, but we've got to the cut-off point, closed the books for the year, and it doesn't really matter now if the Dow moves to the downside, because as it said in the article from the S&P, mission accomplished, and the market back to where they wanted it in order to secure their bonuses. And most of the benchmarks of the financial markets are based upon the broader market, the S&P 500 as well. If you're wondering why it's the S&P that's been brought back to its unchanged level, that's the reason. So the Dow daily moving back to the upside, but down on the overnight there. News today, well, it's bank holiday for really most of Europe, particularly the German ones. Half-day trading session here as well. Unemployment claims out at 1:30 p.m. just to give the market any boost that it may have, but most people will be leaving early today in anticipation of tomorrow's Christmas Day celebrations there. On the implied volatility front, let's have a quick look. We've got a figure of, when it appears, 13.55, moving lower. A really good drop off here actually. And if it stays quiet during the Christmas period, by the time we get back to week on Monday or Tuesday, the market will be down at this sort of level again where we saw the last reactions to the downside as well. So if it is quiet during between the Christmas and New Year, then the payoff for that is there will be a lot of volatility when we start back a week after next. Right, well, that's really it for today, and like I say, I shall be here next week anyway, and I will have a look, see what's going on, and still reporting as normal anyway. So that's about it really. There's a lot of exciting things to look forward to from sort of late January onwards, hopefully as well. A few more exciting things coming down the line as well with regards to the strategy and adjustments and so on, but more on that later. So just to let you know, we're not sitting here twiddling thumbs and just trading, also working on newer things to refine things as well. Right, that's it for me for today, and all that's left really is to wish you all the best for the festive seasons, and again to reiterate that I do really appreciate your support. Don't take it lightly. It's very kind of you. Have a great festive season. I will see you in Tuesday's market alert. There's no point in doing anything for Monday because obviously it's half day trading today. So have a good one. Thanks for watching. See you in the next one.